Imagine you own a small brick and mortar business. Storefront, a few employees, customers are walking in and out every day. It's a Tuesday afternoon. A customer walks in, slips on a floor that was mopped 20 minutes earlier, and breaks her wrist. She goes to the ER. A few months later, you get a letter from her attorney demanding $200,000. You didn't do anything wrong in the ordinary sense. The floor got mopped. There was a wet floor sign out. You're a decent operator running a decent business. None of that matters right now. What matters is whether you have general liability insurance, what it covers, and whether the limits you bought are enough to make this demand letter someone else's problem instead of yours. If you don't know who I am, my name is Jim Eddington, and my agency helps individuals and businesses with their insurance every single day. Here's what general liability actually does, what it doesn't do, and how to think about the coverage for your own business. General liability, GL for short, is the coverage that responds when someone outside your business claims your business hurt them, damaged their property, or harmed their reputation. It's built around a handful of coverage parts, and each one handles a different type of claim. The first is premises liability. That's the slip and fall scenario. Customer gets hurt on your property, GL responds. It pays for their medical bills, it pays for their lost wages, and if they sue, it pays for the defense attorneys and any settlement or judgment up to your policy limits. The second is products and completed operations. If you sell your product and that product causes harm after the customer leaves your store, GL is what responds. A retailer sells a space heater, the heater malfunctions 6 weeks later, there's a fire. Products and completed operations is the part of GL that handles that claim. The third is personal and advertising injury. This one surprises people. It covers claims like libel, slander, and copyright infringement in your advertising. If a customer says your ad defamed them, or if a photographer claims you used their image on your website without permission, personal and advertising injury is the coverage part that responds. The fourth is medical payments. This is a small, no-fault coverage, usually $5,000 or $10,000, that pays a customer's immediate medical bills without requiring them to sue you first. A customer bumps their head on a low shelf, you offer to cover their urgent care visit. Medical payments handles it. It's designed to stop small incidents from escalating into lawsuits. Those four coverage parts together are what most people mean when they say general liability. They work as a package, and they're written on the same policy. Here's something most small business owners don't realize until they're in a claim. The single biggest value of a general liability policy in a lot of cases isn't the settlement money, it's the defense. When a lawsuit gets filed against your business, someone has to pay the attorneys. A business litigation attorney in most markets runs $300 to $500 an hour. A serious case can generate $100,000 in legal fees before anybody ever settles or goes to trial. On most general liability policies, defense costs are paid outside the limits, meaning the carrier pays the attorney, and that spending doesn't erode the money available to settle the actual claim. This matters because a lot of lawsuits against small businesses are not winnable for the person suing, but defending them still costs money. Without a GL, a meritless lawsuit can drain a business owner's personal savings just paying lawyers to get to the point where the case is dismissed. With general liability, the carrier hires the attorney, the carrier pays the attorney, and the business owner's job is to cooperate with the defense. One thing worth knowing, the carrier picks the defense attorney, not the business owner. That makes some people uncomfortable, but in practice, the carriers have relationships with firms that defend these cases every day and know the local courts. You're getting experienced counsel at no cost to you. You can hire your own attorney separately if you want a second perspective, but the carrier's attorney is the one actually defending the claim. That is an enormous amount of value, and it's the reason general liability is the foundation of almost every commercial insurance program in the country. General liability is not a catch-all business policy. There are several major categories of claims that GL will not touch, and business owners get burned when they assume otherwise. General liability does not cover damage to your own property. If a fire destroys your building or your inventory, that's commercial property insurance, which is a different policy or a different part of the same package. General liability does not cover employee injuries. If an employee gets hurt on the job, that's workers' compensation. In the states we write, workers' comp is generally required once you have employees, subject to state-specific rules and exemptions. Workers' comp is a completely separable policy. GL does not cover the work itself. If you're a contractor and you install a roof incorrectly, the cost to redo that roof is usually a business risk issue, not something GL is designed to cover. But if a bad roof causes damages to other property, drywall, flooring, furniture, that resulting damage may be covered, depending on the policy language and the facts of the claim. GL does not cover professional mistakes. If you're a consultant, an accountant, a designer, a tech provider giving advice or designing something and getting it wrong, that's professional liability or errors and omissions. GL will not respond to a claim that says your advice cost the client money. And GL does not cover auto. If you or an employee is driving a vehicle on business and causes an accident, that's commercial auto. Quick way to keep it straight. Customer slips in your shop, GL. Fire damages your own inventory, property. Employee gets hurt unloading stock, workers' comp. Company truck rear ends somebody, commercial auto. Bad advice costs a client money, professional liability. The way to think about it is that GL covers bodily injury and property damage to third parties that happens on your premises or as a result of your products or operations. Everything outside that box needs a different policy. Limits on general liability are written as a pair of numbers, a per occurrence limit and an aggregate limit. Per occurrence is the most the policy will pay for any single claim. Aggregate is the most the policy will pay for all claims combined in the policy year. For small businesses, low revenue, limited foot traffic, straightforward operations, $1 million per occurrence and $2 million aggregate is a typical starting point. That's enough to handle a serious slip and fall or a modest products claim, and it's what most landlords and vendors require on a certificate of insurance. As a business grows, more employees, more foot traffic, more revenue, higher value contracts, the $1 million, $2 million setup may stop being enough. Some carriers offer $2 million per occurrence and $4 million aggregate as a primary limit. Others don't. If your current carrier caps out at the $1 million, $2 million, you have a couple of options. You can move to a carrier that writes higher primary limits, or you can keep your base GL where it is and add a commercial umbrella on top. The right answer depends on what the carrier offers, what the contract requires, if applicable, and what makes sense on price. If you do go the umbrella route, it's worth knowing there are actually two flavors. Excess liability is a policy that sits directly on top of your GL and extends the limits. A $1 million excess policy on top of $2 million primary gives you $3 million of coverage. Commercial umbrella is similar but broader. It sits over your general liability and your commercial auto, and sometimes over the employer's liability portion of your workers' comp policy. What actually ends up scheduled on an umbrella varies by carrier and by form, so any commercial umbrella should be closely scrutinized to understand what's covered and what isn't. For businesses with real exposure, commercial landlords, businesses with heavy customer traffic, businesses with contracts that require high limits, commercial umbrella is usually the right answer. For a small business with straightforward operations, a well-written base GL may be enough. We'll be doing a dedicated video on excess and umbrella for business later because the structure and the decision matter enough to deserve its own explanation. Most small businesses don't buy general liability as a standalone policy. They buy a business owner's policy, a BOP, which packages general liability together with commercial property, business income, and sometimes a handful of other coverages into a single policy at a single premium. A BOP is usually the right structure for a brick and mortar business that owns or rents a physical space. The GL inside the BOP is the same general liability we've been talking about. Same coverage parts, same limit structure, typically the same defense structure. The difference is that it's bundled with the property coverage you need for your building, your inventory, and your equipment, and with business income coverage that replaces revenue if you have to shut down after a covered loss. For larger or more complex businesses, general liability is written on its own with property written separately. That's a judgment call about which structure serves the business better, and it's the kind of thing we work through when we build a commercial program. The point is that general liability is the foundation. It's the first coverage you need, it's the coverage most often required by landlords and vendors, and it's the coverage that determines whether a demand letter is a nuisance or an existential threat. everything else in a commercial insurance program is built around it. If you own a business and you're not sure what your general liability limits are, or whether you have the right coverage parts, or whether you should be on a BOP or a standalone policy, or whether excess or umbrella makes sense, the fix is to get your current policy reviewed by someone who understands how it actually works. We help businesses in Nevada, Arizona, Utah, and California with their commercial insurance. If you want to compare what you have now against what's available, get a quote at wpinsure.com. There's a link below. If you're a contractor specifically, we did a separate video on general liability for contractors that goes deeper on the exposures that are unique to construction. Subcontractor risks, certificates of insurance, the differences between GL and commercial auto on a job site, it's on the channel. And subscribe to the channel. We publish almost every business day, and most of what we cover is for business owners and homeowners who want to understand their insurance before they need it, not after. Thanks for watching.